Imagine a world where the hottest trend in luxury watches suddenly takes a dramatic twist. We're diving deep into the fascinating world of Rolex watches and the surprising reason why Rolex flipping, the phenomenon that's kept collectors and enthusiasts on their toes, is finally coming to an end. We'll uncover the key factors and market dynamics that have reshaped the Rolex game. Stay tuned until the end to understand how these changes might impact your perception of Rolex watches and what this means for luxury timepiece enthusiasts. You know how things in the market have been a bit topsy-turvy lately? Well, that's pretty interesting, and we'll explain why. First, let's take a step back and remember the craze around Rolex flipping. People were buying Rolexes to wear and also hoping they'd make money from them. Waiting lists were long, and the prices you could sell them for were super high, kind of like the Wild West in the world of watches. But why did this happen? Well, it was a mix of reasons, and we'll talk about those in a bit. From low interest rates to the fear of missing out, it was like the perfect storm. To be honest, COVID-19 left an impact on pretty much everyone. With the pandemic expected to stick around for a while, getting the economies of countries and people's budgets back to normal wouldn't be easy. But here's the thing. Rolex was doing well during all of this. Now, let's find out why. First, let's talk about why the value of gold became important. You see, Rolex used tons of high-quality gold to make their watches. And here's the thing. Gold tends to do well when the economy isn't doing so great. This has been true during wars, recessions, depressions, and pretty much any tough economic situation you can think of. Even during the flu pandemic in 1918 and the less severe one in 1968, the price of gold went up. So, when most countries were having a hard time with their economies, the impact on things like stocks, bonds, forex trading, and other investments was big. But gold, in some markets, stayed strong and even thrived. This could explain why people still wanted to own gold Rolex watches during a pandemic. Then, there was this desire for assets that did well when times were tough. While some investors could hold on to their investments for another year, others couldn't handle the losses and decided to sell them quickly. Gold jewelry, including gold Rolex watches, fit the bill because history showed that these watches would keep their value and even increase in worth over the next year or so. This was way better than watching their other assets lose value, with no guarantee that they'd bounce back after the crisis ended. But it's not just about gold's history of performing well during tough economic times. It's also about the idea that gold is always seen as valuable. Now, think about how the general public sees Rolex watches. Even folks who don't know much about luxury watches can easily recognize the name Rolex. To them, Rolex means quality and value. During a time when so much things felt uncertain, having a Rolex watch was like having a symbol that some things stay strong and reliable even in a crisis. After all, the Rolex brand has been around during world wars and other pandemics. Now, let's talk about those interest rates we mentioned earlier. One of the strategies that most countries used to help stabilize their economies during the pandemic was to put a limit on interest rates. This included the interest rates you'd pay when borrowing money to buy things. Depending on where you lived, these limits could make it possible for you to buy a Rolex. Getting a loan, especially to buy something that's likely to become more valuable, was a smart move back then. Lenders saw loans used to buy Rolex watches as less risky, which meant they offered better interest rates. If you had the resources, it was a great time to get into this kind of investment. But the changes in how people behaved during the pandemic were truly something else. The speed at which consumer behavior shifted was incredible. People who wanted a bit of luxury but couldn't experience it in person turned to online shopping in a big way. They rushed to internet marketplaces, and this led to a huge demand, especially for luxury items like Rolex watches. And on top of that, there were production constraints because companies like Rolex had to temporarily stop operations to keep everyone safe. This only made the demand even stronger. One big factor was the fear of missing out, but from an economic perspective, the super low interest rates were the main thing causing all this disruption. Moving on, let's understand how important it is to understand the current situation with historically low interest rates. To protect against a worldwide economic downturn, central banks around the world decided to lower interest rates. The luxury watch industry wasn't immune to the effects of this important and well-intentioned move. Today, we're in a new era. To deal with the increase in inflation, interest rates are being adjusted. We've made some progress, but there's still work to do. Luxury watch prices are starting to show these changes, and as a natural result, their prices are coming down. It's like the saying that what goes up must come down, and the same idea applies to high-end watches when there's a decrease in demand. However, there's also this thing called price arbitrage that adds another layer to this complicated situation. The basic idea here is to take advantage of price differences in different markets. Simply put, it's about buying something at a lower price in one market and selling it for a higher price in another. It's fascinating to see how this concept was used in a new way in the Rolex industry. The major and secondary markets for Rolex watches essentially sold the same products, which made them perfect for something called arbitrage during the pandemic. Rolex watches were special because they promised to become more valuable over time, so people wanted them. This led to waiting lists getting longer. You can see how this works with a person who buys a Rolex watch from an official store at the regular price and then sells it in the secondary market where lots of people want to buy it. The profit comes from the difference in price between the two markets. As long as there's a demand for Rolex watches in the secondary market, this deal is pretty safe. But when Rolex prices start to go down, things change. The appeal of this investment method goes down because now there's a risk of losing money. Today, we're seeing some interesting things happening in this dynamic market. Models like the Datejust, which used to have long waiting lists, suddenly became available for immediate purchase in a shop in Las Vegas. This showed that Rolex prices, in general, were going down. Even though certain models like the Cosmograph Daytona and limited editions still sold for high prices, the overall trend was a decrease in Rolex prices. The fact that we haven't seen the full impact of the economic crisis yet is a big worry. Even without a big economic downturn, Rolex prices have been falling dramatically. History tells us that during tough economic times, the fall in prices might be even bigger, and that could make people who buy and sell watches stay away from the market for a while. The things that shape the crazy price changes in the watch market, especially in the luxury segment during the pandemic, are complicated. Sure, low interest rates and the idea of arbitrage played big roles, but it was also about how people behaved, the fear of missing out, and the problems with making enough watches. This concludes our video for today. Let me know your opinions in the comments below. And don't forget to like and subscribe to Luxury Focus to stay updated with all of the latest news in the world of timepieces. Until next time!